This class topic is a depreciation chapter. Depreciation means decrease in the value of assets by constant use of assets in the business. In accounting, the amount of depreciation is recorded and also eligible for deduction under matching concept. It is recognized in the accounting. So when depreciation charges on uh, respective assets, journal entry is recorded, depreciation account debit to assets account. There are several methods are provided for recording depreciation amount in the bookshop account. Today I am using one straight line method of depreciation, and the problem is solving using this method. So before moving on the solution, so I request all the viewers kindly visit to this channel frequently, like, subscribe and share with your friends, and also drop your comments. Okay, so now here is the question. ABC Limited purchase of machinery on 1st April 2018 for rupees 3,50,000. It purchased another machinery on 1st July 2019 rupees 1,50,000. Another machinery was purchased for 1 lakh. So it has, the ABC Limited has purchased 3 machinery on separate, on a different accounting period. So this machinery falling on different accounting period. In a different accounting period, this machinery will be recorded. So first machinery purchase on 1st April 2018. So when machinery purchase, so journal entry is recorded in the book, machinery account debit to bank account, and when it is posted into ledger of machinery, and the machine debit side to bank account. The value of machinery is 3,50,000 and the date of purchase is 2018 April 1. In this machinery account, depreciations will be recorded, and is there any installation charges, then here again debit side installation charges shall be added, capitalized, that means added to machinery price. Okay, in this question installation charges is not given. If it is given in the question, then again you have to write on the same date 2 installation charges, what is the amount, and after adding this installation plus cost of machine together, depreciation will be charged. Okay, now here the depreciation at the end of the year, so accounting period is, it should be closed on 31st March every year. So a starting date, so some business maintain 1st January to 31st December their accounting period, and some business maintain 1st April account 1st April to 31st March of the following year. Okay, so this is, and that is why it is current falling 9 months of 2018 and 3 months of 2019, and together 2018-19. Now on the last day, at the end of the accounting period, depreciation is charged. So understood, depreciation, when depreciation is charged at the end of accounting period. Okay, on after on this, and the amount of depreciation 35,000. It is calculated based on this information. The rate of depreciation is 10%. So 3,50,000, 10%, 35,000. This is calculated, and thereafter balancing of account. So debit side is 3,50,000, credit side is only 35,000. So obviously debit side is greater than credit side. All right. So this balancing of account, balance obtained is 3,15,000, and this balance shall be transferred to next year, and that is immediately next year, that is after 31st March April 1 2019. Balance BD 3,15,000. So under a straight line method, the amount of depreciation charge each year is fixed. So first year 35,000, second year 35,000, third year 35,000, provided the machinery is used throughout the year. In the first year it was used throughout the year. In the second year it was used throughout the year. So whole year depreciation. So if the machinery is used less than 1 year, then proportionately the amount of depreciation will be charged. So now this thing proportionately, this you will understand in machinery 2. Here 11,250. So now to understand this, you see here. So on 1st July 2019, the second machinery was purchased. So then machinery account debit to bank account 1,50,000. It is given in the question. Okay, here this is on 1st July 2019 for rupees 1,50,000. Another machinery was purchased. This one, understood? Now this is from 1st July, from date of purchase to closing date of accounting period. From date of purchase is 1 July, so 1/7/19 purchased, and to 31st March 2020. Closing date, from the date of purchase to closing date. Always you remember, from the date of purchase to closing date, the first year depreciation shall be charged. So in the first year may be less than 1 year, but in the second and subsequent year it will be full year, whole year. Okay, and now business has two machine 1 and machine 2. The amount of depreciation is to be recorded correctly. And here this one, the machine 1 and machine 2. So machine 1, so amount of depreciation is fixed. In the first year 35,000, second year 35,000, due to because of using the straight line method. Under a straight line method, amount of depreciation is fixed each year, whole year. If it is less than 1 year, then the amount of depreciation will be charged proportionately as it is shown here. Okay, now this for this is you understood, from 1st July to 31st March 2020, or from 1st July 2019 to 31st March 2020, the total number of months is 9. So then 9 months of depreciation will be charged in the first year on second machinery. So 9/12, and the cost price of second machinery is 1,50,000, and the rate of depreciation is same, 1,50,000. Rate of depreciation is given in the question 10%. So 10/100. So in this way you will, if you calculate 9/12 into 1,50,000 into 10/100, then the value is 11,250. Understood? Okay, now balancing of account, again on debit side is having greater, this 4,65,000, this total, this two total, and depreciation just it is calculated in this manner. Here it is total 46,250, and the balance will be 4,65,000 minus 46,250. The balance is 4,18,750. This is the balance sheet. Now in this 4,18,750, there are two machinery values. So machinery 1 value is 2,80,000 and machinery 2 value is 1,38,750. It is calculated in this manner: 3,15,000 minus first machinery depreciation 35,000. So balance is 2,80,000. So 1,50,000 the second machinery cost minus depreciation, this 11,250. So balance is 1,38,750, and this together closing balance, so 4,18,750. Understood? Now in the third year, so this balance transfer to third year, CD, BD. Okay, this balance 4,18,750, and individual value you can write inner column here, this one individual value. All right. Third year here, by bank account. On 31st October, the first machinery, this machinery, this is the M1, sold at rupees 2 lakh given in the questions. On 31st October 2020, the first machine which was purchased 1st April 2018 was sold for rupees 2 lakh. Value 59,583. So you understood this bank account. When machinery sold, so then journal entry is bank account debit to machinery account. Okay. So in machinery account, it will be credit side by bank 2 lakh. When machinery is purchased, debit side to bank account. When machinery is sold, credit side by bank account. What is the selling price? Selling price is 2 lakh. In this deal, in this sale, what is the loss or profit made by business on sale of machine? Okay, and this fact I will make clear with the help of working notes. When you are preparing the machinery account, then profit or loss on sale of machinery always calculated using this step. So original cost of machinery, it was purchased on 1st April 2018 at rupees 3,50,000, and now it becomes 2 years 7 months old machine. This machine becomes 2 years 7 months old. So then 2 years 7 months old, 7 months depreciation we have to deduct from the cost price to calculate the profit or loss on sale of machinery. 2 years 7 months depreciation. So this is the first year depreciation, this is the second year depreciation. Here it is given 2018-19, 2019-20 and 2020-21. This is on 31st October the machinery was sold. In the year of sale, depreciation shall be charged up to date of sale. Understood? Of third year. So from April 1 to 31st October. So it comes 7 months. That is April, May, June, July, August, September, October, including October, since it was sold on 31st October. So October month shall be included. 1, 2, 3, 4, 5, 6, 7. So 7 months depreciation shall be charged in the year of sale. As I told you that up to date of sale, the depreciation shall be charged, even it in fraction year. 3,50,000 into 10 by 100 into 7 by 12. So number of months, and this is the total number of months in a year. So it comes 20,417. So this 20,470. After adding this, it should be deducted from the original cost price of the machinery. The total of these three is 90,417, and this minus this equal 2,59,583, and this represent value of sale as on October 31st, 2020. Now the value of machinery shall not be taken as 3,50,000. It should be always taken as a depreciated value. So after charging the number of years depreciation, the value obtained is this one, 2,59,583. So and this machinery is sold at rupees 2 lakh. So that is the sale price is less than the machinery value on the date of sale. So hence the balance represent loss. So 59,583, this is the loss amount. All right, understood? Okay, so this is the loss on sale. So when the loss on sales 59,583, This is called loss on sale, and this loss on sale shall be transferred to profit and loss account and journal entries here. This is in the year of sale. Bank account 2 lakh rupees. Depreciation this 20,000, just I told you there, 20,000. This is depreciation 20,417. Okay, depreciation 20,417 shall be debited, and the loss which is just shown you here, this 59,800, 59,583, and this is the loss to machinery account. This is the journal entries. And here I have written to profit and loss account. If there is a profit, then this profit and loss account will be not debited. Okay, then profit and loss account will be credited. Loss, profit and loss account will be debited. This one. So either one is possible. Both are not possible. The machinery value is 2,80,000, and in the year of sale, the machinery depreciated value is 2,80,000. Here I have shown the whole year's depreciation. Okay, calculation the profit or loss on sale of machinery. For calculation of profit or loss on sale of machinery, you have to show the whole year's depreciation, or by taking this value also, by taking this value. This, if you are taking this value, then so if you take this year this value 2,80,000, then you deduct only this year depreciation. Okay. Or if you take this 3,50,000, then you deduct, so first year depreciation, second year depreciation, and third year depreciation, this one. All right. So two ways we can calculate here. So then, understood, this is the profit and loss account, credited 59,583, and the depreciation charged. Now remaining assets depreciations will be shown here on March 31st. It is shown by depreciation. The machinery one which was sold of sale, the amount of depreciation calculated is 20,417. You have to show it. All right. And here one more, on January 1, another machinery was purchased, 2021, of rupees 1 lakh. On 1st January 2021, here machinery, another machinery was purchased for rupees 1 lakh on January 1, 21. And this is another machinery was purchased on 1st July 2019 for rupees 1,50,000. So there are three machinery purchase. So three machinery 1, this one, machinery 2, this one, machinery 3, this one. All right, 1 lakh. Now when it is purchased, January 1, 2021. So accounting period will be closed on 31st March 2021. So that means this machinery depreciation will be charged only 3 months, January, February, March. Here, so M3, 3 months depreciation, 1 lakh into 10 by 100 into 3 months, so 3 by 12. Calculate the value, you will get 2,500. So all this total 37,917. Again balancing of account, understood? Balancing of account, this total plus this total 5,18,750, and balancing of account here, this one is 5,18,000 250 minus 2 lakh minus 59,583 minus 37,917. The balance is 2,21,250. This is the balance sheet. And in this balance, only two machinery represent. So machinery 2 and machinery 3. Since machinery 1, this one, it is the sold. So now it is the sold out, and this machinery will not appear again. It is a completely sold out. All right. So then only machinery 2 and machinery 3. If you want to verify, then you can verify this value 2,21,250. So this machinery, second machinery 1,38,750 minus second machinery depreciation 15,000. So balance you will get 1,23,750. And the third machinery, this one, 1 lakh minus 2,500. Balance 97,500. The first machinery is completely sold out. Understood? I hope all of you have understood this. I tried to convince you to explain the thing step by step. If you have any doubt, you see twice, thrice this video class, you will understand. Thank you very much. So don't forget to like, subscribe and share with your friends. Jai Hind.